Hi, it's Larry Gaines, Paracycle Trading. I wanted to show you a trade that I did back on the 20th of May, and this is on Google, and it was a swing trade short. So based on our trading model, the Paracycle model, I initiated the short on the 21st, and let me show you that chart. That's based on an hourly time frame. Using the model, I use it and run it across multiple time frames for swing trade setups. And so I first start out, I'll look at the 1 hour time frame, and I had my model go short Google based on the model here about 1 o'clock Central on the 20th of May. And you can see Google is trading very sideways to flat, but the momentum was coming off. So the model, Google looked way overextended as well. Let me show you back to the daily. It had a fantastic move to the upside and way overextended. So looking for a short setup here, and one that I could do with defined risk. So I used a put spread, and I bought the 900 puts here. I'll go through that in a second, and sold the 890. So I had a $10 put spread, and there's this gap right here that you can see as well that gets filled at 888. So at the time, my model was turning over, momentum was starting to wane on Google, all-time contract highs, so thought it was a good high probability trade to take. So everything was in my favor based on the model, extension of Google, all-time highs, round numbers, $1,000 being talked, something like similar to Apple. So I like to put trades on where I can look to fill in a gap, and so that's why I structure this put spread as a 900, 890, $10 spread, because that would give me room to at least get through this gap area. As you can see, it did even more and extended all the way down to the 21 period moving average. So this was an area that I definitely took the spread trade off, because this is your first initial decent support, is the 21 period moving average. So I'll be watching it now for swing trade long. So I'm going to, based on the model, watch it for the next day or two to see what happens if it holds here based on my model. Now if it breaks the 21 EMA here, then the next level of support's down here at 845. You can see this pivot high and extension pivot high right there. And then the next after that is 814. So this was the trade. Turned out really nice. And those are the reasons I did it. So if you have a directional trading model, then you can use different strategies in order to take advantage of price direction. So that's what I've done here with the Paracycle trading model and using options. So the option trade that I did to define my risk was I bought, here's the 900 June 7th expiration puts, and then here's the 890 June 7th expiration puts. So I bought the 310, I bought the the 900 puts, paid $13.10, so it's $1,310. Sold against it as soon as I did the trade. It was a spread trade. The 890 puts below, so a $10 spread at $940. So I was able to get into this put spread at $3.70 or $370. So that was my defined risk, the max at risk, max capital at risk, and a $10 spread. So the max potential gain would be about $630. So $10 less your spread cost of $370. Now what I did, going back and analyzing the trade, I should have done the weekly closer in expiration, like I should have done the put spread for expiration on Friday the 24th, or next Friday. But what happens is that this was the June 7th, so it's pretty far out. So the market's very, very thin. I wasn't sure about Google dropping this fast, dropping this much this fast. So I went out a little bit further to buy time. But now, since it's dropped so fast, being Google, it can move so much, I didn't want a chance having this thing when it reached that 21 EMA that I showed you in the earlier chart. I didn't want a chance for this to bounce back and start moving back up, so I went ahead and took it off, and I basically had to get what I could. It was fairly thin, But I was able to get out of the trade on Friday, the 24th. I sold off the 900 puts that I was long at 29.80, bought back the 890 puts that I was short at 22.80. So I was able to get out of the spread at $7. So I had the spread on at so put the spread on at 370 and got out at $7. So let's see, that was a profit of $330 a contract, or an 89% return on capital. So that was a good, trade. It was a lot faster than I thought it would be, which is a good thing. And I was able to put that trade on Monday, the 20th, and I took it off on the 24th, and a defined risk trade, and made 89% return on my capital. So if you'd like to learn more about trading using a directional timing system and then combining that with option strategies, please come join me at PowerCycle Trading, PowerCycleTrading.com. And thanks for your time. Have a great Memorial weekend, and good luck trading Tuesday when the markets reopen.